We are live. What's going on? Facebook, YouTube, and wherever else you are watching this. This is Nate Hare. I'm the Director of Sales at NuView Trust Company, your self-directed IRA company based right here in Orlando, Florida. And we're on for another Wednesday webinar. We have a great workshop today with an actual client from NuView. And I've had the opportunity to sit down and talk about cryptocurrency and all sorts of things with Jim McSorley, who's going to be on very shortly. And he's got a great presentation. And it's nothing better for us to have actual clients and investors come and tell their actual stories about what they invest in with their self-directed retirement accounts, and really just give people the knowledge that you can invest in anything when it comes to a retirement account. And if you want to invest in alternative assets, NuView is the place to be. So our workshop today is diversifying your tax-free retirement with digital assets. That's cryptocurrency, for those of you who don't know, and it's from a client's journey, and that client is Jim McSorley. But before we get to him, I just want to talk a little bit about NuView Trust Company. If you are new to the program, NuView Trust Company is a licensed and bonded retirement trust company. What we do is we manage and administrate retirement accounts. That would be IRAs, like traditional IRAs, Roth IRAs, 401ks, even health savings accounts. But we all administer them for the use of buying alternative investments. And I'll talk about what those are in a second. Our product is called the self-directed IRA, but that's really just a marketing term. So before you get into it any deeper, if you've heard about a self-directed IRA, just realize self-directed is a marketing term. When you're talking about a retirement account, they all work the same and they all follow the same rules. It just depends on who is the custodian of that retirement account, what they'll allow you to invest in. Doesn't have anything to do with the IRA. It just has to do with the company that you use to administrate your IRAs. So when we talk about the accounts that we have that can be self-directed here at NuView, they're the same accounts that you can use elsewhere. And I'll get to those account types in a second. But why do people want this self-directed IRA? Why are so many people gravitating away from the traditional investments and investing in alternative investments? We've seen the numbers grow over the last decade, and they've been growing exponentially. The main thing is diversification. People are finding out now that they need to be more diversified, especially when you get into turbulent economies and things going up and down, and you don't really feel right about certain things in the stock market. It's important to know you can invest your retirement into other things. The IRS code only prevents us from investing in two investment types: life insurance contracts and collectibles. That's it. Anything else, if you can hold title to something, if you can draw up a purchase contract to buy it, it can be bought with your retirement account. You just have to find a company that can push the paperwork for you. So most of our clients at NuView have accounts because they want that diversification. They want to be able to hold some stock at Fidelity, but hold a rental property with NuView, some mutual funds at Charles Schwab, or a promissory note at NuView, or cryptocurrency at NuView. And that's what we're going to be talking about today. So main point with retirement accounts is you can have as many as you want, but have them at different custodians that allow you to have the broadest availability to invest in the availability to invest in the broadest spectrum of investments to give you that true diversification. The other thing that's really good about retirement accounts is the tax savings you get. Here's why I think today's workshop is vitally important. If you go online and you read anything, just Google Bitcoin. Very few people are talking about investing in Bitcoin tax-free. It's a relatively new investment for most people, but some people have been investing in this for decades. I understand that. But it's one of those investment arenas that's new and people haven't planned ahead to do it in a better way. Well, our client, Jim McSorley, has been doing it the better way. And that's by buying and selling cryptocurrency within your retirement account. And here's why. There's no capital gains tax that you have to pay when you buy and sell investments within your retirement account. You can buy and sell rental property in a retirement account. You pay no capital gains tax. You buy and sell real estate as an individual, you pay capital gains tax. 99.9% of the people that are buying, holding, and selling Bitcoin today are buying it with their own cash. They're going to have to pay capital gains tax at some point. So there's going to be a massive shift. And some investors have been smart enough to be ahead of the curve on this, and that's by buying and selling cryptocurrency in a retirement account. You pay no capital gains tax, right? You don't have to worry about the tax reporting at the end of the year. You don't have to worry about a big swing in the market, positive in your side of the court, that you have to pay taxes on those gains. We're one of the few retirement or IRA companies out there that allow people to buy cryptocurrency in their IRAs. And we'll talk a little bit about the process there, but tax savings is huge, especially when we're talking about buying digital assets. But just invest in what you know best. When it comes down to it, you're going to be a better investor long-term if you just invest in the things that you're knowledgeable about. So I would just ask the question to you, if you were sitting there in front of me, what do you know? What do you understand? Do you like Bitcoin? Do you understand Bitcoin better than you understand mutual funds? Then shouldn't you invest your retirement into Bitcoin or digital assets versus a stock or a mutual fund? Invest in what you know best. You'll do yourself better service. And what accounts could you use to buy digital assets or real estate or other alternative assets? Well, these are the 7 plans that we have here just at NuView. We have clients that use Roth IRAs, traditional IRAs. If they're self-employed, they may use their SEP IRAs, simple IRAs. Even a solo 401k is a product that we have here for anybody who's a small business owner with no common law employees. You can use a solo 401k to buy digital assets or alternative assets. We even have health savings accounts and Coverdale education savings accounts, which are not IRAs, but they are tax sheltered vehicles that can allow you to make contributions to them. Sometimes you get tax deductions on the contributions, depending on the type of account. But the cool thing about those 2 accounts is the profit grows completely tax-free as long as you take the distributions to pay for health expenses or education expenses for your kids and grandkids. All of these accounts right here have better tax benefits than we do as people. So if you're maximizing your ability to use tax advantaged accounts in your investing, you'll keep more money in your back pocket because Uncle Sam touches less of it. And that's really the key thing that NuView helps people do, is eliminate Uncle Sam by eliminating taxation from your investments, including cryptocurrency. So we're going to jump into the presentation here in a second, but I just want to give you kind of a rough idea what some of our clients are investing in today. We currently have about 15,000 active investors spread out all across the country. We hold about $2 billion in alternative assets. What's the makeup of those alternative assets? Things like real estate, fee simple real estate, rental properties, land, commercial property, apartment buildings, condominiums, syndications, secured and unsecured promissory notes, investments into private entities like LLCs, partnerships, trusts, non-publicly traded entities. And we have a growing number of clients that are currently investing in cryptocurrency, Bitcoin, Ethereum, Litecoin, whatever you can name out there, whatever you can buy can be owned in an IRA. But what's the process? What are the steps? There's no better person to talk about that and talk about their own journey than our own client, Jim McSorley. So I'm going to bring him on to talk about his investing experience in cryptocurrency and how he's been doing this in his retirement account. Jim, are you with me?
Yeah. Hi, Nate.
Hey, Jim. I will tell you guys, you are in for a treat. Every time I get to meet Jim and his wife, we have great conversations. I think at the last event, they had to kick us out of the venue because we were just there. We were still talking about cryptocurrency and all the fun stuff that you guys are doing. And I thought we got to get this conversation to the masses. We have to have more people kind of understand it because there's so many people that are investing in cryptocurrency, but they're not doing it in an IRA. I can tell you that. And I know you're one of the people that have been doing it. And you're also going to be sharing this information with us at our investor retreat coming up. We'll get to that at the end. But Jim, I wanted to welcome you. I want to thank you for being with us. Tell the audience who you are, a little bit of background, and take it away. And I will tell everybody on here, if you have questions for me or Jim, just type them into the chat box. If it's relevant to the conversation at the time, we'll address it at that time, or we'll just take all the questions at the end. So just type them into the chat box there. Jim, take it away.
Well, thank you very much, Nate. Thanks for providing me this opportunity to share this with everybody as well. Welcome to all of those who are watching. I'm going ahead and start up my screen here. My agenda has 4 main topics. I'd like to share sort of the background, my background, as well as a background around the internet and the history of the internet, how the different generations of the internet have gotten us where we are today. And in doing so, I can share with you a little bit about my perspective. I don't want to be technical. This isn't meant to be a technical training or anything like that, but I do have some analogies that I'd like to share to give some other people a perspective on what it means to be a digital asset. And I hope to define that for this audience today. I would like to share with you specifically my journey with crypto, both as a private investor and as a retirement investor, and the differences that I've encountered along the way. I'd like to give you some tools and show everybody how I identify and evaluate certain digital assets and how to navigate the thousands of options that are out there and what it all represents. And lastly, as Nate suggested, there are multiple ways in which you can invest through your retirement account. I will share with you those 3 methods that I've found and then go into detail specifically on how I did it over about a year ago. There are 3 goals that I would like everyone to leave this meeting being able to answer these 3 questions. So what is the next generation of the internet and why? What are digital assets and where can you find them? And lastly is, of course, the real goal here is how to invest with your retirement funds. So 4 objectives of this meeting, 3 goals I'd like you to take away. And I'd like to also share with you 2 of my personal goals. Like, why am I doing this? Why is a client from NuView taking the time to share all this information? Well, there's 2 reasons. One is I want to pay it forward. I want to be able to share with a larger audience. I am an investor in these assets. I'd like other people to be aware of those opportunities, and I'd like to make sure that I'm paying it forward. Number 2 reason, to be perfectly frank, is I'm seeing a huge opportunity to change my career. I see this as the beginning of a conversation with a large audience, and at the end, I will invite all of you to connect with me in whatever method you choose, because I feel that this will become the next generation of my career, and that's how invested I am in this, both financially and personally. And so without further intro here, let's go into the background and perspective. I'd like to share with everyone the growth of the internet. Let's reflect on 5 billion users over the last 25 years. And look at that growth curve, right? And many of us may remember or might not the birth of the internet. We didn't know what it was. You remember Gopher, Telnet, FTP, bulletin boards. What were all these things? They were all predicated on protocols that were established all the way back in the early 80s. And building on those protocols, we saw things like HTTP. And again, this isn't meant to be a technical presentation, but that's how the web works. Invented in 1991. The very first web pages were created in the early 90s. And so from there, we saw the creation of a browser, the web browser. What's a web browser? Nobody knew. Nobody knew www. They didn't know .com. Very early days. But Netscape was a visual interface that allowed you to navigate what was otherwise a very technical realm. It also simplified the internet and became the launch pad for the growth that we see on this curve. Netflix came about in the late 90s. It went digital later, but that's how old it is. Google in the late 90s. You remember that if you were around investing in 2001, what we referred to as the .bomb of the stock market, right? All those .com companies crashed. But they came back, and they came back strong, right? In the next phase, we see things like Facebook, we see things like the iPhone in 2007. Bitcoin's been around since 2009, right? So the iPhone and Bitcoin are really kind of, twins there. They're not that far apart. Ethereum is another type of cryptocurrency or digital asset that came about in 2015. I want to talk a little bit later, or I'd invite you to write down MetaMask and Uniswap. And why am I focused on those? They are the Netscape equivalent in the modern era. They are the Netscape moment where technology has now been simplified to the point where a simple user interface can demystify what is otherwise a complicated topic. So that's what happened from an industry perspective over the last 30, almost 35 years. I'd like to share with you a little bit about my personal background. I started building commercial websites in 1995. I saw this internet thing as being this huge megalithic, wave. And I grabbed my surfboard and I grabbed on with both hands and I made it my career. I was involved in e-commerce startups and other technologies in the early 2000s. I was focused on building websites for educational colleges and universities through the mid of the 2000s. I then focused on unified communications. Well, what is that? That's fancy speak for what we're doing right now through Zoom. I was doing it almost 10 years ago in a corporate context. and then leading IT business operations, and ultimately got involved in crypto investing just a couple years ago. And so it's often said that someone who did it before you is already an expert, right? If you know nothing, but they've been doing it for at least a day, they know more than you. So I'm no crypto expert. I'm not here to profess that. However, I've been doing this for a couple of years and I've come to a bunch of conclusions that I'd like to share with you. Not the least of which is look at the number of estimated crypto users today. It's about 300 million. Okay, so if that curve is going to look anything like the green, right? If the red line is going to start to look anything like the green line, then you can see how the use of crypto is going to explode. I believe people are going to be using these technologies without even knowing it. It's going to exist behind the scenes. It's going to take over and become the middleware, if you will, on most of transactions that take place on the internet. So I'm not predicting that there will be a similar growth curve for crypto, but the history is repeating itself. And some people say history doesn't necessarily repeat exactly, but it often rhymes. I'm hearing that tune. It is rhyming. I've been here for 25 years. I've seen this before. It's happening again. So when we look back on the internet and especially the web, it can be broken down into 3 specific generations. And that's the purpose of this slide, is to share with you not only the growth of the internet and the potential growth of crypto, but really how Web 1 in the early, in the 90s was about publishing, a one-way path of content being distributed to a bunch of consumers. And then things like Facebook came along and we started to realize that there are platforms that allow users to create content, not just have some monolithic publisher, but rather a communal two-way platform. And that's been coined Web 2.0. Ever since the advent of Web 2.0, we've been trying to define Web 3. It's been unclear. I've seen this through the journey. It's been, is it video? Is it meta this? Is it Second Life? These are early attempts to create the kinds of things we're starting to see take form. Web 3 is about value distribution, and it originates with blockchain technology invented first by Bitcoin, and now through a whole series of other forms that are known as altcoins. Web 3 is the current and most modern generation of the internet. And I believe Web 3 is going to take over every transaction that we do. It's going to become the backbone and the basis by which we communicate through these technologies. And we're only at the very beginning. And so I hope I've given everybody a sense of, to reflect on the generations of web technology and where we are today. So what I'd like to do now is a little mind exercise. I'd like to just go through an analogy and share with you one way in which I think about what is this crypto? What are these tokens? What is this thing called a digital asset? So I'd like to pose a what if scenario. I'd like you to think about this token that I'm showing on screen. Well, some of you might recognize that's a New York City subway token, good for one fare, right? As it actually says on the coin. And what this represents, of course, is you can put it into a gate or a machine or doorway, and it will allow you access to ride the subway. And it's spent once it's done, right? Well, in the early days, back in the early 1900s, maybe it only cost a nickel. Of course, nowadays to ride the subway, it's almost $3. Now, that's not the kind of that doesn't even account for inflation, right? That's not the kind of tremendous growth that we're seeing in other tokens. And that's not my point. It's less about the value of the token as much as it is the rights and privileges that the token grants the bearer or the owner. Imagine if you had purchased, let's say, 1 million subway tokens in the early 1900s. That's generational wealth, right? Perhaps it only cost you whatever, $500 or maybe $5,000, which would have been a tremendous amount of money in the early 1900s. But you can't use 1 million tokens in your lifetime. You would end up giving them to your family. You would end up selling them to other people at a profit. So the token in this case represents the right of ownership and the privilege to then use it according to how it's been described. There were about 32,000 investors, according to this article, right, from back in the early 1900s. 32,000 some investors. Now, of course, at the time they did it through municipal bonds, most likely, right? But imagine if they could have actually pre-purchased the very tokens that they wanted to use to ride the subway. And so what you see here is an analogy for the conversion of traditional money, or fiat, as is often referred to in this business. And here you see people feeding money or paper money into a machine. Well, that's an exchange. You exchange your fiat for tokens, and those tokens grant you rights. So I wanted to share with everybody this, and I'll come back to this analogy because I think it's a really good way to conceptualize what am I buying, right? What is the purpose behind all of this? And so I'll come back to that later. Well, what makes a token's value go up? Continuing with the subway analogy, I found this map from 1904. Most people think of this is Manhattan set on its side, right? And so that's what it looked like at the very beginning, about 15 stops. Here's what it looks like today. And if I were to overlay the two, you get a sense of how much of this network of railroad, for lack of a better term, how much this network has grown. Why is it more valuable? It has more stations and more people are riding it. And it lets you go further. And so one might say, well, the value went up because the construction cost went up, right? The token cost more. Well, the token is really subsidized in many regards, but the number of people riding has grown so much that I really can't see construction costs as being the major factor, especially if you're using this as an analogy for where we are with digital tokens, because compute power is only going down in price. Compute power is not going up. And so I'm going to discount the idea that it's the construction cost or the compute cost that would make the value of a token go up. What I would contend is the value goes up based on its usage. Here we see a graph of the population of New York City over the last roughly 200 years. And you can see in the early 1900s how the population of New York simply exploded. Well, with the growth of the population and the demand for people to navigate, you see the growth of the network. The inventor of Ethernet, which is an internet-based technology that we're all using right now, named Metcalfe, he came up with a law that suggests the value of a network is based on the number of nodes or participants squared, or V equals N to the power of 2. Again, I didn't want this to be overly technical, but that's a pretty simple equation. Value is a function of the number of participants squared, right? That's an exponential curve. That's not a straight line. What makes the value of a token go up? Usage, growth, participation. How does this apply to Bitcoin? If we apply Metcalfe's law to Bitcoin, here you can see a graph that takes the addresses used per day, not the number of people who hold Bitcoin, but the number of addresses per day in red, and the price of Bitcoin action until up to about 2007. This chart's a little bit old, but this is up to 2007. And I mean, there is a pretty clear correlation there between the number of addresses being used and the price action of Bitcoin. If we smooth that curve and give it a little bit more time, on the right here, you can see the price of Bitcoin relative to V equals N squared. That is a remarkable correlation. Of course, there's peaks. Rarely are there troughs. And if I were to extend this to where we are today in 2002 at the beginning, we're just about halfway between, this is a logarithmic curve, we're just about halfway between 10,000 and 100,000. So right now, the price of Bitcoin is about 46,000. I would argue we're right on target, right? And okay, we could speculate, we could go forward. I don't really want to even vocalize the numbers that this is starting to represent. But if this curve were to continue, then we might draw certain conclusions. I'm not here to suggest that's actually going to happen, but there is a remarkable correlation here, and this is something to pay attention to. V equals N squared, Metcalfe's law. New York City is not the only subway system in the world. Bitcoin is not the only digital token in the world, right? So here's a graph that I found in some research paper talking about the number of cities with new subways being built throughout the world. Obviously, you're seeing, again, exponential growth. And the length of those subways, again, it's an analogy, but the length, the amount of railroad track, right? And one, the analogy here would be the number of computers that are involved in securing the network, the number of Bitcoin miners, as an example, the number of validators on the Ethereum network. That would be an analogy to how much railroad track have we put down. The same reason why the subway systems and railroads grow, you see, I think, digital tokens and their value will continue to grow. So there's this famous spot on SNL where Elon Musk was being interviewed by Michael Che, and Michael Che consistently said, yeah, but what is it? What is this thing, right? And so I can't answer that in less than an hour, but I can give you a summary view of what I think what is it. Well, first of all, the term blockchain technology. That can be researched on its own. I would invite you to go to look that up if you're not familiar with it already. But what it does is it allows for irrefutable proof of who owns the token, how many tokens are there, And what was its history from its point of origin or its provenance, right? How did it get where it is? You can see who previously owned it, for instance, just like you can trace the title of a real estate or the title on a vehicle. And so blockchain makes that possible. Now, I want to actually suggest that the term blockchain is not an accurate description of what we're talking about here. I think that we should remove the word blockchain and refer to it as distributed ledger technology. There's one thing we know, and I know about being involved with technology for more than 25 years, is technologists are really bad at branding things, right? They're really not good at naming stuff for the general population. And so calling it blockchain in my mind doesn't work. What IT people, technology people are good at is creating three-letter acronyms. So let's go with DLT, right? Digital ledger technology is the way that I like to think about what we're talking about here as the thing that makes it possible. It is that original protocol back to the early 80s, and then HTTP. It's an analogy of what a platform, a software, a program, or a protocol that's been recreated, and a la Bitcoin starting in 2009. Within that technology, you have this concept of a digital token, a discrete measure of ownership. That provides incentive. And I'll share a little story. My grandmother worked as a subway conductor during World War II in the city of Philadelphia. Imagine if I had purchased 1 million subway tokens and I wanted to ride the subway, I would give a portion of that token to my grandmother for running the train. Say, thank you, Grandma, right? Thank you, that's your piece, that's your cut. I'm giving you some of my token. That's an incentive to run the network. And so you can see how the subway analogy is something that I often refer to as a way to explain what is the purpose behind this concept of a token. It incentivizes creation, maintenance, improvements, growth, and this concept of staking, where you pool those tokens into an environment where they're locked up and can be borrowed by other people, or can be used to prove ownership. And so that's what a digital token provides as incentive. And they are divisible. You do not need to buy an entire Bitcoin. You can buy 100 millionth of a Bitcoin. It's called a Satoshi. Other tokens are also divisible by a ridiculous amount, and you can buy them in very small quantities. We can avoid the concept of unit bias, right? We don't need to own a whole coin. They're tradable, right? Using the internet technology and using the distributed ledger that sits behind it, you can trade ownership. It's immutable, meaning once it's recorded on the distributed ledger, it cannot be changed. There's no one can go back and take it back or change the numbers or hack the database. It can be programmed with software, so it has logic and smarts. You'll read a little bit about this concept of a smart contract. If you're not familiar with that, it's another keyword. I invite you to Google search, what is a smart contract? And then this idea of fungible or non-fungible. Well, that just means that fungible means they're interchangeable. All these tokens are basically equivalent. You can trade one token for another and they're considered of equal value. Non-fungible suggests that it's unique, it's discrete, it is only one of one, and therefore it has a just different type of valuation. And I'll get into that a little bit more. So this is, in summary, if to take away sort of an overarching statement here, a digital asset is a tokenized representation of ownership, right? So why is it an asset? Because it's a representation of ownership secured by a distributed ledger, or I call it blockchain, that's up to you, having financial value. It is not an asset in my mind if it has no value, right? But that value could be based on financial. That's to me a digital asset. It might not have financial value, but it does still grant you rights. And so the question becomes whether or not you want to transfer those rights for a fee, which ultimately leads to financial value anyway. But there are lots of factors I've already talked about within the analogy of the subway system, the liquidity, its usage, its popularity. These are the things that drive that value. And so this is my attempt to say, yeah, but what is it? And I would leave this for you to explore and research more as I've suggested. Okay, moving on to the next part of the presentation, my personal journey, right? Let me share with you a little bit about my background with crypto. It all started when I realized during COVID shutdown and other things, I would like to be more involved in investing. And I started researching more about cryptocurrency and what is this thing, this digital asset marketplace. So I started putting cash. I started putting my own non-qualified, not retirement account, just savings account. Put a little bit of money in this thing and see what happens. throughout 2020. And, most people go on the journey, they buy some Bitcoin and then they come back later, they got comfortable with that. Now they buy some Ether and they get comfortable with that. And now they put a little bit more money in there. And so I had established a certain amount in my savings that I put into crypto, and wow, right? 2001 was bonkers about halfway through. And then crypto does what it, did what it does. And it's like, okay, well, this is a bumpy ride, but I'm still way up. I'm still happy. And oh, but if I sell, I'm going to have taxes. Maybe I don't want to sell. I had found myself involved with over 200 transactions before I even realized, how to keep track of it. And so I'll talk a little bit more about how I kept track of it as we go forward. And then the remainder of the year into 2021, things improved. And as of the time of me taking these screenshots, I'm up 400 some percent. Now, it's not my attempt to brag. In fact, a lot of people would argue that's all, right? You've seen crypto things, you've seen digital tokens go way higher than that. It's all about risk mitigation. It's all about distributing, your investments across a portfolio in order to manage risk. So I'm quite pleased with this. Of course, the market's going to continue to do what it does, but the tax implications of selling, even trading, and that's often overlooked. People don't realize if you trade Bitcoin for Ether, as an example, there's no US dollars involved in that transaction. However, you still need to report whether or not you had any profit or loss just from the conversion of one token to another. So what are some of the tools that I used in order to keep track of this, in order to buy into this? Well, the exchanges that I used during this time of me working with my non-qualified funds, not retirement account, are shown here. And there's others, but these are the ones that I focused on the most. And those are the exchanges that, do I recommend them? They're the ones I use. I'm not here to give financial advice. This is up to you. I will tell you that being in the United States made a big difference on which exchanges were available to me and which ones are not. Which wallets did I use to keep track? Well, I mentioned MetaMask earlier, right? I would encourage everyone who's listening, download MetaMask into your, like a Chrome browser, and get familiar with it. Create a wallet, secure your keys, your seed phrase, make sure it's in a secure location. Become familiar with MetaMask, go to uniswap.io or .app, I think it's uniswap.app. Use or explore Uniswap, watch videos on it, etc. And there's some other wallets there that I've used as well. Excuse me. From a resources perspective, and I'll talk about this a lot more in detail later, is CoinGecko. It is my #1 go-to location for anything. If somebody even mentions a coin in passing, or maybe I'm riding the subway and I hear someone talk about a new token, I will immediately go to CoinGecko and I will look up as much as I can to learn about that token. TradingView is used by technical analysis traders for years on traditional assets. It works just as well on crypto. I'm embarrassed to say I've watched many hours of YouTube. I graduated top of my class with an MBA from Rollins College in Orlando. And I'm here to say I learned more watching YouTube than I learned more about finance and investing and technical analysis than I did in my MBA program. So YouTube is a tremendously valuable source. And then lastly is Coinly, Coinly.io. I would invite all of you to use this in order to keep track of all your transactions. Coinly does a great job tapping into the exchanges and the wallets and automatically feeding all of those transactions into one place. So it's kind of like a Quicken or a QuickBooks view of your crypto transactions in one place. I use it not only to track my portfolio, but in order to generate the tax reports that I can hand to my accountant. There's others, that just happens to be one that I chose. So upon doing my taxes for 2020, it became very clear that I wanted to figure out a way to invest in this environment with digital tokens and digital assets that in a way that avoided taxes. And that's when I came across NuView. And I'll talk about some of the other people that I work with to establish this account in a minute. But when I realized that NuView would allow me to use my Roth IRA, specifically Roth IRA, because I don't want to deal with taxes ever again if I don't have to, in a way that I could then also purchase crypto. And that's what I'm going to talk about later. So that I add the custodians to the list. And in May of 2021, I started putting my Roth IRA into digital assets to the flatline level that you see here. And I'm happy to say that as of the time of me capturing these screenshots, I'm up 66% in less than a year, in just about 6 months. Great, could that go to zero tomorrow? Of course it could. These are the things we have to be cautious about. I didn't put my entire Roth IRA into crypto. Most people, Again, I'm not here to give financial advice, but most people I talk to will do speculative assets around 5% of their portfolio. And so there's a guideline that you might want to consider. These are the tools that I use specifically for my Roth IRA in order to be able to conduct transactions. I was not successful in creating an institutional account with Coinbase. They never got back to me. But Kraken was very accommodating and Binance was accommodating. I'll talk a little bit later about how that works. But I use MetaMask and other mechanisms to store my wallets. I am the custodian of the actual keys to the actual crypto. So I am not relying on a third party to host or hold. I do have some assets on the exchanges themselves. That makes them interchangeable. But if I want to bring them off the exchange and secure them, kind of like you might just be buying actual gold and putting it in a safe. It's the same concept of being a self-custodian of the actual assets, not being a custodian of the IRA account. That's what we hire NuView to do. Along the way, I learned a tremendous of acronyms and jargon, like any industry, right? I was a real estate agent. I've been involved in real estate investing for over 20 years. I've learned the lingo and the jargon. This is a whole nother level, right? This is a whole nother level of memes and internet speak and text messaging abbreviations and acronyms. And there's just so many here. I'm not going to go through all of them, but the list continues on and on. If you want a copy of these slides at the end, I'll give you an email address. I would invite you to connect with me. I'd be happy to share all of this detail with anybody who's listening. But there's something I wanted to point out. Decentralized finance, or DeFi for short. I believe decentralized finance is going to do to banking what the internet did to publishing. Now, what do I mean by that? Well, the publishing world was turned upside down. And when I say publishing, think broadly. Think not just newspapers and magazines, but think about audio, think about video. Clearly, right? iPod and Apple iTunes has completely revamped. That was its early days was Napster, right? That was, you know, the early days of the wild, wild west of audio distribution. And then of course, Netflix came along and proved how to do it with video streaming. And nowadays you just go to your TV, you pull up a menu, you hit go, and the video starts playing. You don't really know, you probably don't care how that actually works. That's where I believe we're going with distributed ledger technology sitting behind the scenes on everything, just like the internet sits behind the scenes on everything today. So decentralized finance is something I wanted to make a note as well. Distributed autonomous organization. I would ask you all to put a pin in that, write it down, Google it, think about it. I believe the concept of a DAO is going to completely disrupt what we consider to be corporate entities and the way that corporate entities are structured today. Now, the legal definition of all these things is still being figured out, but they exist, they're real, and I'll give you some examples later of how it's being used. So put a note on that. Lastly, this meme of BRRR. Well, those real estate people that are listening to me, that's not what you think it is in the world of digital tokens and cryptocurrency. In this case, BRRR stands for something other than what you're thinking, because 80% of all dollars in existence were printed in the last 22 months. The M1 money supply isn't even being used as a registered, as a formal mechanism anymore, because of this absurdity of the money printing that's taken place. So what does that mean? It means inflation. So money printer goes is exactly what this meme suggests. That is the BRRR acronym in the crypto world. And so that's kind of where we are today. And a lot of what we do in crypto is in response to inflation. It's of course not the only meme. We can't have a conversation about memes without talking about the original meme coin, known as Dogecoin. It is pronounced Doge, not doggy or anything like that. This was the top meme of 2013, according to the Know Your Memes website. Well, a few years later, a gentleman created a digital token as a joke. And he said, I'm going to create Dogecoin and we'll use this as a way to, tip each other. And, oh, that was a great meme. Let me give you some Dogecoin. Well, this thing later on in 2021, with the likes of Elon Musk and others getting involved, this thing went ballistic. That to me is tulip mania, right? For those who recognize that reference to it and the absurd growth of the asset for no intrinsic value, that's what we're talking about. Had you put your stimulus check into Dogecoin at the end of 2020, by May of 2021, you would have roughly $300,000 in Dogecoin. I believe there were people who did that. And it summarily went right back down. I think it's around at least half of what it is, of what it was at its peak, if not less. And I'm here to tell you, this is a joke. I'll explain later a little bit more detail why this is not the kind of things I would consider to be a true digital asset. It doesn't do anything. It doesn't have real value. It's something that people have grabbed onto, and the only reason it goes up is because there's somebody else behind you who's willing to buy. This is not your typical cryptocurrency, and it's certainly not your typical digital token. So let's talk about non-fungible. Again, just like I can't get away, any conversation about digital tokens has to talk about meme coins. I also need to talk about NFTs. When the subway system converted from a physical coin to this card that has a magnetic strip, every one of those cards has a unique ID number. That's how they track the value that is stored on the card. That is a non-fungible token. All right, the analogy continues. So you have a Metro card and it has this unique ID, therefore it has a specific value maintained by a central database that is, the MTA. But you could tokenize just about anything, right? This ticket to this football game is a type of NFT. You sit in a specific row in a specific section in a particular seat, and you could buy this actual ticket on eBay. I think they're charging like $30, right? So that thing went up in value. This is a token, a non-fungible token. It's unique. It's the license plate to your car. It's a way to register your vehicle. Your identity is a form of non-fungible token. And I believe one day it will be placed into a distributed ledger technology that will be immutable. And it shouldn't be transferable, right? That will be one of the rules of the game, but that's why it's programmable. We could see the stock in a company. I absolutely see stock ownership is transitioning into digital tokens instead of the physical, we don't do paper anymore, but the concept still holds true. This image has sold for over 700 Ether. Notice I didn't put that in US dollars, right? When you're involved in, and you're like, why in the world would somebody pay 700 Ether? By the way, that's valued today at over $2 million. $2 million for a picture of a monkey, right? Why? Because it's absolutely unique, it's scarce, you're part of a club, it gives you certain rights and privileges. There's a nightclub in Miami that lets you into a certain section of the club if you can prove to them that you own this particular Bored Ape, is what they're called, the Bored Ape Yacht Club. These things are selling for millions of dollars. They also generate yield. I don't know the particulars behind that, but there are people who hold this thing for $2 million and generate $150,000 a year in what is essentially a dividend. It's almost inconceivable, but it deserves more research because the art world was the first one to get there. That doesn't mean the rest of the world isn't going to follow suit. Constitution DAO, D-A-O. I mentioned distributed autonomous organization earlier. There's this thing called the Constitution DAO, where they raised, through what is essentially crowdsourcing or crowdfunding, raised over $47 million in like less than a week. And their objective was to purchase a very early copy of the United States Constitution at a Sotheby's auction. Now, they didn't win the auction. A single billionaire ended up buying it instead. However, all of the monies that were collected are now in the form of a token that is called the People token. And you could actually look up the People token on CoinGecko, and it is tradable, even though they never actually executed on their original vision. Now, I don't know how sustainable that is, but this concept of DAO is being very prevalent. I believe anything that, and Nate mentioned earlier how you can hold things in your retirement account that is based on anything that has a title or an proof of ownership. Real estate deeds fit that description. Title searches will be done through a web browser off of a distributed ledger. Again, this will be years from now, but I believe that this is the future of where we're going. Everything that has value will be tokenized, even to the point of a pair of sneakers. We're seeing this where a QR code is showing up in the inside of a sneaker because that sneaker is unique, and then you can look at that sneaker in the real world, or you can go into a meta world, a metaverse, and you can have that pair of sneakers digitally on your avatar. This is a thing. People are getting into this in ways that we would have never believed. The St. Regis Aspen raised over $18 million through the sale of fractional ownership in the resort. I expect the Aspen token to become available on a secondary market. It's not available yet. They're still working on that. But you can have fractional ownership in real estate through digital tokens. It's starting, it's happening, it's real. If you're interested, I want to talk to you more about how to bring this into your business. So how do you find these digital assets? Well, we track traditional assets all the time, right? These 11 market sectors are very familiar to everybody. You can go on CNBC, they're constantly telling you how this index is tracking against this market sector. You can have lists of these names, you can see them visually, you can track their prices, tick by tick, second by second. Well, the exact same thing has happened in the digital currency world. I'm referencing CoinGecko here as an example. There's others, but this is the one I use. And they're starting to mature. We're starting to see categories of digital assets, and you're starting to see indexes where one token is tracking a collection of other tokens. So you can buy into decentralized finance as a basket through the digital token. It's the same kind of maturity that we're starting to see, or that we see in the traditional space, is happening in the digital space. And you can track these. There's this trading view. You could track Bitcoin or whatever, tick by tick. And so let's look at CoinGecko a little bit closer. CoinGecko.com, easy to get to. Here you can see by market cap. You can see the total market cap at the time that I took this screenshot was about 2.3 trillion. That's all the cryptocurrencies being tracked by CoinGecko. They're organized by market cap. If we were to scroll down a little bit, here we can see the relationship between Bitcoin and Ethereum. A lot of people like to track those two because they are the big two, as you can see here. The third largest one is Binance Coin at 87 billion. That gives you a sense of, Binance Coin number 3 is only a 10th the size of Bitcoin. So Bitcoin is still the king. Tether is the first stable coin that we see on the list. You're like, why is it $1? Well, that's the whole point. It's always supposed to be $1. And there's many others there. Those are called stable coins because they're pegged to a specific currency, in this case, the US dollar. If we scroll down a little bit, you can see some others. There's Dogecoin. $22 billion are tied up. And I emphasize this so much because it's almost unbelievable. $22 billion are tied up in what is essentially meant to be a joke. And Shiba Inu is the joke of the joke, right? And that one's a close second. It's unbelievable to me that amount of money is being locked up in something that literally does nothing other than be a part of a club. Maybe you could be proud that you own it and it went up in value. Good for you. Wrapped Bitcoin is the same thing as regular Bitcoin, but operating on the Ethereum network, right? So now it's not just on the Bitcoin network, it's value that's been transferred synthetically. This is a type of derivative. And so you could start to see how this industry is maturing and growing and becoming bigger. If I go back to the screen, the homepage for CoinGecko, you can see there's an option for categories. If I click on categories here, you can see the different groupings that I mentioned and what are their market capitalization of just things that are involving smart contracts, just involving the Binance Smart Chain, just involving stable coins. Here you can see $61 billion tied up in all the stable coins. So I would invite all of you to explore these categories and use them as a way to navigate and learn about which subject areas are you most interested in. I mentioned decentralized finance earlier. It's number 8 on the list. Clicking on that, you can see that there's again, listed by market cap, Terra Luna, very high on the list here, market capitalization of 30 billion and much larger than all the others. So if we were to click on Terra Luna, for an example, you can see lots of detail. You see that it has 1 billion tokens as its maximum supply. That's important when you talk about supply and demand, right? If you have a fixed supply and you have infinite demand, well, you could see what happens next, right? So that's just one example. I'm not here to promote any one particular coin. It just happened to be at the top of the list. And I wanted to show you some of the other features of the Terra Luna environment. You can also click on markets within the CoinGecko environment. And when you do that, for Terra Luna specifically, you can see all of the exchanges in where Terra, as an example, can be purchased or traded. So again, CoinGecko becomes the launch pad by which you do your research. If I were to back up a little bit here, there's terra.money is the website you would go to in order to learn more about Terra Luna. Again, not here to promote a particular coin, just wanted to show you an example. Here's Bitcoin. I would go to bitcoin.org in order to learn more about it. I would see that its market cap is almost 900 trillion. No, billion, excuse me, 900 trillion, that would be great. 900 billion. Its max supply, there will only ever be 21 million Bitcoin. There are 56 million millionaires in the world. If every millionaire wanted to own one whole Bitcoin, they can't. There are only ever going to be 21 million. At the moment, approximately 800,000 addresses are known to own at least one Bitcoin. 800,000 whole coiners is what they're called. You don't have to be a whole coiner in order to get involved. As I mentioned earlier, these things are divisible. So you do not have to own an entire Bitcoin. But if you want to, now's the time. If you want to be part of the 21 million club, now's the time. Dogecoin, look at its total supply. Infinite. Literally. There is an unlimited supply of Dogecoin. I want a deflationary asset. I don't want an inflationary asset, or at least something with fixed supply. So let's get to the heart of the matter. Thank you for sticking with me this whole time. Buying digital assets with your IRA. There are three ways to do this with what are known as qualified funds. Do these funds qualify as being part of a retirement account, or are they non-qualified in the form of cash? Well, I told you the cash activity is taxable. So so I've said to myself, how do I get involved with with qualified funds, and how do I make sure that these qualified funds, are up and up, are on the up and up? Well, one way to do it is simply through your existing brokerage. You can buy into publicly held equities like banks and developers and persons who, a great example would be Michael Saylor and his company MicroStrategy. MicroStrategy is a publicly held stock. He's basically turned that company into a Bitcoin holder. You can go buy MicroStrategy in your brokerage account right now. There are mutual funds where you can purchase futures contracts and the like, or a bundle of equities that rely on the other publicly held and publicly traded investments. Or you could buy into a trust, over-the-counter type trust shares. These trusts, basically the most common one is Grayscale, GBTC. You could go buy GBTC ticker symbol right now in your traditional brokerage and get exposure to the price of Bitcoin. The second way to do it is through a self-directed IRA with a custodian. You can buy certain popular digital assets like Bitcoin, Ethereum, and others. You will get a customer service team to help you, and they are going to be regulatory compliant. I'll give you some examples of one in particular that I know NuView works with. And so it is possible to work with NuView and to work with a custodian of those coins such that you don't have physical ownership. The third option, and the option that I personally selected because I wanted the greatest level of control, was known as a self-directed IRA with checkbook control. I can, once establishing that checkbook through a bank, in my case, I happen to use Chase, I can work with any exchange where they know who I am. As long as they know who my company is, my LLC, and I'll explain all this in a minute, but I established an LLC that actually holds the account value of the IRA. And as long as I can register with that exchange and they know who I am, then I can conduct business with them. I hold the personal wallets. I have to protect my keys. I have to keep everything safe. I am responsible for maintaining the sanctity of those coins and the ownership of those coins. There is no third party who's going to be responsible should I lose my keys or my passwords. So everything to the left is fast. The examples 1 and 2, they're quick, they're easy, you get fewer options. You're going to have some third party fees involved more than you would otherwise. And at the moment, you deviate from the net asset value because you're typically buying a derivative or you're buying a synthetic representation. But if you move to the right on this grid, right, in the green, the self-directed IRA with checkbook control, as you move to the right, you get more flexibility, more choice. You're closer to fair market value because you're buying the actual asset. You do have to self-custody and take on that responsibility. So it's going to be a little bit more complex and it might come with a little bit more risk. If you can develop a comfort with that, I believe, and I did, and I believe there's value in doing so. I'm not going to explain the first option in great detail, right? You go to your brokerage, look up the tickers, and you can buy them. The second option is self-directed IRA with a custodian. This is a very general example. You create a new account with NuView. You fill out a transfer form to move the assets. It's a simple one-pager. And wherever your funds happen to be, they can be moved into a NuView account. And NuView will be the custodian of those funds on behalf of your IRA. From there, you can set up a trading profile with an exchange. I know that NuView happens to work with IRAs, and you can then issue a purchase authorization where you're telling NuView, please move those funds into the IRAs account where you can buy and sell digital assets hosted by IRAs. You won't necessarily get to all the cryptos that are out there. You won't see every digital token that's on CoinGecko, but you'll see the ones that are popular and you'll be able to get exposure, probably to the top 10, top 20, something like that. The more complicated scenario, and the one that I personally went through, and I've even helped other NuView clients through this process, and I'd be happy to help you through this process as well, because again, I'm looking to get more involved in this industry. I'm looking for an avenue in order to assist, whether as an educator, as a strategist, as an investor, what have you, co-investor, that type of thing. So I took my Roth IRA account, I completed a transfer form with NuView that moved my Roth IRA from what was E-Trade into NuView. They held my funds until such time that I registered an LLC. I created a company by working with Joe Siegel. He's a lawyer that is very familiar with this process, and he was able to guide us through it very quickly. He established an operating agreement, very detailed, very, very formal, very appropriate for this industry. And I then applied for an EIN with the IRS. So upon creating an LLC and getting an EIN, I was able to open a business account with Chase. And I just happened to choose Chase. That's not an endorsement so much as just an observation. I opened a business account by using the operating agreement and the EIN. Now, Chase doesn't know anything about the IRA part of this. They don't really care. They just know they're opening a business account that's involved in investing. I then filled out a purchase authorization with NuView that allowed me to move the funds from NuView into the Chase bank account, where I then had a checkbook in my hands. I literally had a checkbook. I run the business. I'm not the custodian of the funds. The LLC is the custodian, and NuView is the custodian of the IRA. I know that sounds complicated, but this all works, and it's all, it's all legit. So opening that institutional account, in this example, I'm talking about Kraken. I was then able to wire funds from Chase to Kraken so that I could then buy and sell digital assets with Kraken. Now, I have other exchanges I work with as well, but once I converted, right, once I fed those dollars into that machine and exchanged them for tokens, now I can move them all about, and that's the point, right? That's the point of having all these different wallets and all these different locations and all these different investments. So in summary of your IRA investment options, the first one is just work with a brokerage. No direct exposure to the underlying spot price, but it's quick and simple, and it will come with the highest fees. Option two, you can get exposure to assets that are held by a custodian. You don't have to deal with the headaches, but you're going to have a limited offering, and it's going to have a closed loop, right? There's only so many things you're going to be able to get exposure to. In the third option, you can work with institutional accounts at any exchange that allows it. It will take time. The paperwork can be a little hairy, but it's, in my opinion, it was worth it. You only had to do it once, but you do need to become comfortable with the idea of self-custody. You have to hold your keys. Never share your private key or your seed phrase on anything with anyone. I don't even keep them on my computer. I do not keep seed phrases on any digital format whatsoever. I write everything down securely. You got to keep backups, and always, always, always use multi-factor authentication when given the option. I won't go into the recommendations for how to do that at this time, but if you're interested, Google Authenticator is not my best choice. There are other options. I like Authy, A-U-T-H-Y, and multi-factor authentication is absolutely paramount to the security of your crypto. So in summary, or in final thoughts here and recap, as I mentioned earlier, I believe DeFi will do to banking what the internet has done to publishing. This is going to happen quickly. We are already in Web3. It has been well established. Distributed ledger technology is growing. I was there to see the internet grow. I made it my career. I am here to tell you that DLT is growing probably twice as fast. So what took the internet 25 years to reach 5 billion users, probably going to take about half that time for DLT to hit everybody. All 5 billion internet users are eligible to use this, whether they know it or not. I believe the name cryptocurrency is no longer an accurate description of what we're talking about. Not all tokens are a form of money. They're not, that's not their point. That's not their purpose. And the other factor here is digital assets need to do something. I railed on things like meme coins like Doge because I don't feel like they do anything right now. They might in the future, that might change, but they don't grant rights. They don't solve a problem. They don't streamline processes. They don't disintermediate the middleman. They don't do anything except be fun. And maybe that's the value. I don't know. Over time, everything will be tokenized. Title to your car, your identity, real estate. I believe you'll be able to conduct real estate transactions over your phone in a matter of seconds, where you're buying a fraction of the property that's being advertised, probably with a cohort you never met. You don't need to trust the other players. It's all being governed by the software. You can do this with your IRA account, and we are still very early in the process. We are roughly in the mid-90s. Like if I were to say, hey, Where are we in this whole distributed ledger technology world relative to where we were with the internet? We're rightfully around 1995, 1996, the early days. We probably will have our own dot bomb, whatever that means, right? The crypto dot bomb. That could happen. That likely will happen as we continue to mature. But I feel like we're still very early, and now's a great time for you to think about doing this with your retirement funds that you don't need right now. But by the time you do need them, I'm expecting exponential growth. I'm available to connect with anybody who's interested. I'm available to do public speaking, private coaching, one-on-one type stuff. If you just want to get your feet wet, we can design a custom training program where I go through a similar presentation with a larger audience. And I'm also available to take my 25 years of technology and business experience and bring it to your environment. I'm available as a business strategist, as a consultant. So I would ask you to please connect with me through email, jb@mcsorley.net, or you can connect with me on Twitter, where I'll be posting things from time to time, videos you might be interested in, little things that are inconsistent with the story that I've told you here, at JB McSorley on Twitter. And so please reach out. Please let me know how you'd like to engage. I am available, and I intend to make this my career 2.0. Nate, thank you so much for going over time here. I want to hand it back to you and see if there's any questions or where we can go from here.
Yeah, no, it was great, Jim. I will tell you, there's a lot of not just questions, but just comments. Manda, thank you for attending. Excellent overview. Michael Hood, great presentation. Jim, I'm learning a lot. We had some people mention NFTs. I want to touch on that in a second here, but overall, just great information. If you guys want a copy of the PowerPoint, just ask Jim directly. He's got his email address there. I know a couple of people asked if they can get the slide deck. I'll leave that up to you, Jim. I will remind people too, if you're in the area, Jim is going to be doing a presentation at our investor retreat, day 2. And also, Joe Siegel, the attorney that set up his LLC, is also works with a lot of NuView clients. He'll also be at the event. So again, if you can get out to the event, it's a great opportunity to kind of rub elbows with people, get connected with people, meet people face to face. Just wanted to throw that out there. Just great presentation, Jim. We got to have you back and do a little bit more of this, but just thank you for your time. I wanted to touch on one thing, and this is kind of an interesting topic, and I've been kind of, researching this from my own point of view, because I am by far not the Bitcoin expert you are, but I do understand the IRA stuff. And one of the interesting things about NFTs is whether it's considered a collectible or not. And you kind of mentioned that. And the only reason I bring that up in this conversation is when you look at the IRS code, the IRS has a little bit of a hot spot for collectibles in a retirement account. Now, by no means is the IRS fast enough in their game to have an opinion letter on NFTs, but you never know. Down the road, they may come out with an opinion letter, and they may call, if they dictated a collectible, it could be prohibited from being an IRA. Right now, there's no opinion letter. What are your thoughts on that, Jim, from the Bitcoin perspective?
It's absolutely something I considered very early on when working with Joe Siegel and reading the operating agreement that he had drafted. There is a section, of course, the IRS regulations and otherwise very clearly state, I can't go buy baseball cards with my self-directed IRA. NFTs are ambiguous. I believe that the law surrounding them will become clarified over time. There are some NFTs that are for the purpose of granting rights to gain access, much like a ticket to a movie theater, or to be able to go backstage and see your favorite artist. Well, is that really a collectible? Because it's meant to represent a discrete event. And once that event has come and gone, the NFT either was used or it was not, and it's expired. So could you collect that? I suppose that's much like that football ticket that I showed. One would argue that that's still collectible, whether it was even if it had expired. It's really, I mean, the advice that I was given was don't touch it, don't go there.
Yeah.
And I get it, right? I'm waiting for clarification. I do think there'll be a day where NFTs will continue to mature. Their name will likely change. I do think we don't do a good job branding these things in the early stages. I think there'll be different types of NFTs that have different purpose. And when an NFT represents a fractional ownership in real property, one has to argue if that real property is something like real estate or a boat or what have you. That's ironically, we see this with NFTs around artwork. where they're fractionalized. The artwork is acquired in the form of a single NFT, and then it's fractionalized into another form of token that makes the components of the artwork fungible. So you have a non-fungible asset that gets componentized or fractionalized so that each individual fraction is now fungible, interchangeable, and traded on an exchange. And so it's a weird sort of, at what level do you have a comfort with this? And obviously waiting time will tell, and a lot of regulatory and guidance and government, guidance will come forth for us to understand. But for the time being, I don't dabble in NFTs.
Yeah, well, and that's a good point. And the only reason I bring that up is just so, investors have an idea of, what you want in a retirement account and what you don't. Not by no means am I saying NFTs are good or bad or otherwise. That's up for you to decide. But depending on how risky you want to be, do you want to put something in your retirement account that may be called a collectible and may be prohibited at some point? Again, it's too early in the game to really make a decision. I just kind of follow that stuff. And as far as Bitcoin goes, Ethereum, digital assets, they can all be owned in a self-directed retirement account. They can own it a Checkbook Control LLC that's owned by your self-directed IRA. I think Jim did a phenomenal job explaining the difference of those two. From a self-directed IRA company's perspective, it doesn't matter to us how you do it. We just have to make sure that the paperwork is processed through us at some point so that you can paper trail it back to the ownership being your IRA and not you personally. Jim did mention
Nate, I would add to that, you got to absolutely make sure you keep your personal independent from your retirement. Right. So yes. I'm holding up two different notebooks here, two different paper notebooks. These are empty. They're just examples, right?
That was like red pill, blue pill. I felt
exactly.
Like I was in the Matrix for a second.
And I need one that's an orange pill for Bitcoin. But yeah, the whole point is keep them. You must keep them physically separate at all times. Do not commingle your funds. We're just asking for trouble. Yeah, and that's been, that's something I would, make sure that everybody gets that in their head and be very careful about that.
And for anybody out there who's new, or maybe not new to Bitcoin, but maybe you're looking at which setup is right for me, it just depends. What I would suggest is, use Jim as a resource. Tell him what you're investing in. Maybe he can give you an idea. Or if you can't get a hold of Jim, call one of my IRA specialists. They're really good at kind of walking you through the process and say, well, we're never going to tell you what you should do, but we'll give you enough information to be dangerous with and say, here's what the pros and cons to doing it this way. Here's the pros and cons to doing it that way. Now you decide which way you want to do it. It's not for us to really decide. Right. So fantastic. Again, Bart Soringer says, fantastic presentation. I learned so much. I think we'll get a lot of replay on this as well, Jim. So your email might be getting blown up. So hopefully you can handle all that. And there's some people on here that say, can't wait to see you at the event, that they're coming to the event. So that is going to be great as well. I don't know if you want to read through there. There's some specifics to certain coins, or I'll let you kind of look at that and see if there's anything you want to take as now, or you can follow up, via email.
Well, thank you everybody for the positive feedback. Yes, you can hold NFTs in your MetaMask wallet. OpenSea is a very popular exchange, very similar to Uniswap, and where you can buy and sell NFTs. Again, I'd advise, I'm not a financial advisor or a lawyer, but I would recommend you not dabble in NFTs with qualified funds. Non-qualified cash-based funds, go for it, right? Have fun. Please email me, jb@mcsorley.net, and I'll be happy to send a copy of my slides and engage in a conversation. I'd love to know more about your needs and interests. I'm here to help. I'm not a financial advisor, but I'm happy to give advice and educate. Looking for other sand, and yeah, there's people naming specific tokens, and whether or not they're part of one network or another. Those are the types of things that ERC20, you're going to hear that over and over again. What does that mean? It means Ethereum. It's on the Ethereum network. It's a different type of token, but it's on the same platform. Just like you can browse different websites, even using different browsers, and so those websites are served by, on the back end, different technologies are presenting that information to you, and so the path of the network for how they get there is different. If you already have a self-directed IRA with Checkbook Control through an LLC, you might be involved in real estate investing. You might be, writing paper. Now you can add this to, I did it backwards. Most people have the self-directed Checkbook Control for the convenience of managing their retirement account. I got it specifically to do crypto, and now I'm looking at opportunities to do it with real estate as well. And I just, split the money out of that bank account to go one way or the other. That's my choice. That's the point. You can have as many MetaMask accounts as you want. In fact, a little story that I could tell, the concept of an airdrop is relevant to the community within the crypto industry. If you're a participant in a community, if you've used certain wallets or you've used certain applications, that community might reward you by airdropping tokens. They literally just give them for free. I happen to be the recipient of tokens from Uniswap back in September of 2020. I know of a person at the time that had over 80 MetaMask accounts or 80 MetaMask wallets. Every one of them received the Uniswap airdrop. And the value of that today would probably be over $500,000.
Wow.
And so because they happen to participate, for whatever reason, they felt like creating one MetaMask wallet after another. So yeah, that's kind of what I'm seeing when I go through the notes real quick. Thank you everyone for the great feedback, and please feel free to engage. JB@McSorley.net.
Thanks again, Jim. And again, we will see you again in a few days. Jim will be speaking day 2 in our afternoon, where we go kind of off of the real estate path and talk more about digital assets. We also have Eris, John Denja from Eris X that's flying in from New York, who's going to talk a little bit about the regulatory side of Bitcoin today. And then we're going to actually have a panel that the 2 gentlemen are going to be on with some other people and talk about the future of alternative investments, which I think, it's hard to argue that digital assets is not going to be one of the biggest investments going forward. I know it's big in most people's minds now, but I would say it's relatively infantile in the way that it's being regulated, but getting, and Jim mentioned it, it's maturing every day, and it's here to stay. And I think that if you're ahead of the game and at least doing it in a tax-free manner, and Jim said it perfectly, use the money that you don't need right now, let it sit, let it grow, and then when you're in retirement age, then you can use those funds. But if you've got money sitting there in a retirement account, it's not making the dollars that you want it to make, and you want to invest it in alternative assets, contact NuView. We'll get you set up. And again, Jim, thank you again for participating. We're definitely going to have you on again.